Hello and welcome back to the House of Trade. Today we're diving into another fascinating topic, which is the world of the Turkish equity market, also known as the Turkish stock market, where risk takers are cautiously testing the waters for something new. Turkey, known for its serene holiday destinations, hides an economic turbulence that has caught the attention of international investors. So let's delve a little bit more into the data. Now, by all measures, Turkey should be an economic powerhouse, positioned at the crossroads of Europe and Asia, with a population of 85 million people who are very industrious and entrepreneurial. It enjoys strong demographic tailwinds. It's home to world-class companies such as Turkish Airlines and Koç Holdings. Turkey's potential is very undeniable. Even after a recent rally, the stock market trades at just about 5 times forward earnings, making it one of the cheapest markets globally. Now, a few months ago, we probably would not have been talking about the investability of the Turkish stock market, given the unorthodox policies of the leader Erdogan. But the recent shift towards economic orthodoxy under Erdogan has been marked by some notable and positive changes. 2 consecutive interest rate hikes have more than doubled rates to 17.5%. though inflation still hovers near 40%. But despite the challenges, the Turkish stock market has rallied by approximately 55% in local currency terms since May, translating to a more than 14% rise in dollar terms. Foreign investors are cautiously returning, with investments totaling 1.6 billion since early June. But here's where the statistics meet the wild card factor. Erdogan, known for his unpredictability, leaves investors a bit uncertain. In the context of a slowing economy, it remains to be seen if he will stay committed to raising rates. Turkey has immense potential economically, strategically, but it takes a brave investor to bet on Erdogan's economic instincts and his mercurial caprice. So in the midst of this, runaway inflation is fueling a blistering rally in the Turkish stock market. The benchmark, BIST 100, has surged 46% since May, even in US dollar terms, outperforming MSCI's emerging markets index. This rally is happening against the backdrop of Turkey's $900 billion economy undergoing significant changes. President Erdogan's pre-election stimulus measures have definitely driven up inflation, and the new economic management team is striving to restore a more rational policymaking. This unique combination is attracting both local savers and even some foreign fund managers to Turkish equities. Foreign investors, who have largely shied away from the Turkish stock market, have injected about $1.6 billion into the country's equity markets in just the last 7 weeks. And this influx coincides with Hafiz Erkan's appointment as the central bank governor, who swiftly doubled interest rates to combat inflation, which was against the grain of what Erdogan believed in his unorthodox economic policies. He thinks higher interest rates actually cause inflation. So it was a huge departure to more orthodoxy. Now, local residents are rushing into stocks to safeguard their savings as deposit rates offered by banks continue to decline. This trend mirrors 2022, when similar inflation-driven buying led Turkish stocks to a remarkable 110% US dollar return. Good luck investing in it though, and you have to be very brave. Additionally, investors are becoming more optimistic that Erdogan may temporarily set aside his unconventional policies, such as his long-held aversion to high interest rates, as I just mentioned. This optimism is further fueled by the appointment of respected economists as deputy central bank governors, rather than son-in-laws and his mates. From a valuation perspective, Turkish stocks remain very affordable. The BIST 100 is priced at just 5.8 times earning, as I said before, for the next year, compared to about 12 times for the MSCI Emerging Market Index. The recent sale of $250 million of shares in lender Yapı Kredi by Turkish conglomerate, now I don't know how to pronounce this, I think it's Koç or Koç, holding signals growing interest in the equity markets, however you do pronounce it. However, despite these positive indicators, many long-term investors remain understandably cautious. The scale of Turkey's economic challenges and Erdogan's commitment to the new economic program still raise some concerns. Fitch, the rating agency for instance, emphasizes the need for a gradual approach to normalizing monetary conditions and reducing risks for sustained investor confidence. Now, let's switch gears to recent developments in Turkey's economic policy, which is what's leading us to some optimism over Turkish assets. The central bank's sharp increase in interest rates, exceeding expectations, reflects a significant departure from years of unorthodox policies, to say the least. Since President Erdogan's re-election, the central bank governor, Hafiz Erkan, has nearly tripled interest rates in an effort to combat inflation, which is more in line with economic orthodoxy, let's be honest. This decision is seen as a game changer for Turkey's macroeconomic outlook. And if you've seen the Turkish lira recently, or the Turkish stock market, you would see what is being priced in. The rate hike allows Erdogan's appointment of 3 new deputy central bank governors who have been well received by investors due to their strong professional and academic backgrounds in finance. These guys are highly respected. This tightening represents a shift from Erdogan's previous stance of keeping interest rates ultra low, which had led to an overheating economy and a depreciation of the Turkish lira. And I say depreciation like euphemistically because it was a plummeting of the currency. While the currency showed a slight rebound, it remains near historic lows. I remember when the Turkish lira was 6 to $1, and now it's around 26, 27. The central bank also cautions that the weak lira, recent tax hikes, and the minimum wage increases would contribute to even higher inflation rates. In fact, inflation is expected to reach nearly 60% by the end of the year, according to central bank forecasts, which makes Turkish shares an alternative investment even more attractive. So in conclusion, Turkey's equity market is experiencing a period of transformation and resurgence, a renaissance of sorts, driven by both economic policy changes and inflationary pressures. International investors are cautiously returning, but the unpredictable nature of the president remains a significant factor. As Turkey navigates these challenges, it's a market that certainly deserves close attention for those who dare to tread in the realm of financial risk-taking. Thank you for joining me again at the House of Trade. Let me know what you think and your thoughts below. Share, like, and subscribe. Happy trading and stay safe out there. Ciao for now.